Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, the S&P, the QQQs, and several other major sectors performing well, reversing a lot of yesterday's slight market weakness. However, it was somewhat of a low volume day on the SPY, as you can see down there, and on the QQQs as well, somewhat of a very low volume day. Everybody's attention is going to be focused on the biggest player in the entire market, which is going to be NVIDIA, coming out with their earnings tomorrow after the close. So it should be a very fun afternoon tomorrow. But today, we didn't really have much news at all. What we do have to look forward to in terms of macro news is going to be on the Thursday session, where we are going to get the GDP numbers for Q2. And thereafter, on the Friday session, when we get another inflation report reading, which is going to be the PCE inflation numbers. Now, as you can see right here, the expectation for those inflation numbers are supposed to come in a little bit higher for the month of July, talking about 2.9% versus the 2.8 expected. Now, you might not believe these numbers, and maybe I don't either, which is why I always like to look at the Truflation Index read, which reads 30 million different products on a daily basis across shelves, across many different areas of the market. It is a better sense of a gauge of inflation, in my opinion. And as we can see right here, that is currently sitting at about 2.16%. So inflation still not in a runaway scenario at all. In today's video, guys, we're going to take a look at a few things together. Number one, we'll be going through our major technical analysis rundown of all our major market sectors, see where the rotation is and where the rotation is not. Thereafter, we will do the same thing, taking a look at our infamous big tech list down here. A lot of the companies did well today, some not so much, but we will derive whether there are some swing trade opportunities on some of these names or whether or not some of the other names are very good for still adding to long-term portfolio positions. And that's going to be it for today's video, guys. No biggest gainers and losers section of the day. I mean, there wasn't really that much in terms of big losers. There's a few really nice gainers here, but we talked about a lot of them in yesterday's video for about 20 minutes. So I will refer you to yesterday's video. We'll do this entire segment again tomorrow, because tomorrow probably is going to be a day with a bit more volume, and into Thursday as well. I got to keep the video a little bit short tonight because I have to run to a family dinner. So we will keep that section for tomorrow, but let's keep this one short and sweet, and let's jump right into it right away, shall we? On to the SPY, up 0.42, the Q's up 0.40. Not a bad day in the markets at all. If you take a look at the heat map right here, not many major sectors were left behind. Consumer defensives were a little bit soft. We had a bit of mixed price action in big tech here. A lot of the names performing well. Semiconductors looking really good into NVIDIA earnings, but Microsoft and Google lagging a little bit behind. A very nice component of the markets today was financial. Some of the credit card players up higher, the insurance players like Berkshire up higher as well, and the banks looking really good for some possible breakout patterns. We're going to take a look at that in just a few short moments. Healthcare, a little bit muted, and the bottom half of the market, a little bit muted as well. Taking a look at the one-day relative, you can see that even better to where most segments of the market were higher. Industrials, financials, materials, healthcare, technology, cyclicals, and utilities to be specific. Defensives, real estate, energy, and communication services down ever so slightly. But in terms of the heat map, many more names were green than red today. So a fairly decent day in terms of market breadth on the 1 week relative. After the drops of last week and now the pops since Jerome Powell, this is how we currently stand. Only consumer defensives and utilities getting left behind. The rest of all the market segments looking quite good. And even on a 1 month relative, guys, most of everything is performing higher. But technology, surprisingly, has been lagging a little bit behind because not all segments of technology are participating. Software still remaining a little bit weak. And in terms of the 1 month relative, guys, if I put this on, you'll see software, a lot of these names right here, and some of the other technology names, such as the cybersecurity names, Oracle, Microsoft, Amazon trending lower on a 1 month relative, but we do have some nice performance here. Google, Meta, Tesla, Apple doing their best to kind of uphold the markets, and some of the other semiconductor players, not necessarily NVIDIA, Broadcom, and AMD, but a lot of the other ones, guys, the ones that have been left behind a lot. You can see those numbers right there. Double-digit gains across many semiconductor names that people don't play too often. So all in all, not that bad at all. Fear and greed index still is sitting at about a 60 read. Not too greedy, right? But also not fearful in that respect. We also know that seasonality is a little bit choppy coming into the fall period. So keep that in mind, especially coming into these earnings, the inflation report on Friday as well. In terms of the expectations for a rate cut into the month of September, it is now at 89.3%, which is slightly better than just 1 day ago, where it was about 83.7%. So largely traders and investors still expecting a rate cut. And in terms of your overall market breadth, how many stocks are participating recently, it's actually still quite good. The short-term moving average here, percentage of stocks above their 20-day EMA, had a very cool 71%. Just goes to show that in the short term, a lot of stocks are participating to the upside. In terms of percentage of stocks above their 50-day EMA, currently sitting at about a 64.5 read, which is not too bad, right? That's synonymous with several very bullish periods of time in the market, and this one is kind of no different. We are revisiting some of the highest reads that we've had that when we used to have them in May and July, essentially May, June, July. And this one is the best one, guys. Percentage of stocks above their 200-day EMA. I've been focusing on this one a lot in the last few weeks because this is showing that a lot more sectors are starting to participate. You might remember a few short weeks ago, there was a lot of concerns around concentration into some of the hottest names in the market, some of the biggest names in the market as well. That is now changing. Week by week, we are starting to see a little bit more names participate here and there. Percentage of stocks above their 200-day EMA standing right now at about 60%. Which, I'll remind you, is better than every single read that we have gotten since the start of the year. It has not been this good. Truly, guys, you'd have to go back all the way back here to last December to find 60% of the market above their 200-day EMA. So the market is broadening out. The opportunities are also broadening out as well. Now, in terms of our technical analysis here, guys, we're going to jump right into it. I mean, the SPY, not much change, but we know all the volatility catalysts here are coming in the next 2 days. NVIDIA earnings, GDP, the inflation print, and then next week, the biggest one for next week is going to be next Friday, where we get the non-farm payrolls report. But as of right now, the bulls are looking quite fine. I mean, we're still trending above the 12 EMA right there, which is your short-term momentum guide. The line in the sand level is still about 633. So pay attention, guys. This, in my opinion, you're either going to test the highs after NVIDIA earnings, or you're going to retest these lows. But keep an eye on the line in the sand because that's what everybody is kind of nervous about, right? In the event that you break last Wednesday's low, that's a daily downtrend. That will be the first daily downtrend of its kind in the last 3-4 months. It would lead into a bit more weekly consolidation. Good thing, though, the bulls have tons of space. Anything above 620, just looking for a weekly higher low for possible trend continuation. And overall, the bulls are not looking too bad. We're not really overbought on the daily RSI. We're not really that overbought on the weekly RSI. So if NVIDIA earnings are quite good, I would expect the markets to continue to rally and possibly come all the way up into 650. I think NVIDIA is going to report pretty good earnings, and we're going to take a look at an earnings preview on NVIDIA. When we cover that stock a bit later in the video, I'll give you guys some trade ideas in the event that you wanted to play NVIDIA earnings. I don't recommend it, but when we do play it, we have to play it carefully and also play it small. We'll look through a few of the numbers there, of course. Moving into the QQQs right now, QQQs also not looking bad, guys. Keep an eye on the line in the sand level. 559, last Wednesday's low, right? If you lose this after NVIDIA earnings, daily downtrend, also the first of its kind in the last 3-4 months, and would just be setting you up for a bit more weekly consolidation. The weekly higher lows are a bit lower than that, 551, so pay attention. The bulls are working with a ton of space right now, whether you look on the weekly, even if you look on the monthly timeframes, guys. So in the event, let's just play devil's advocate here. In the event that NVIDIA earnings are bad and it leads to a bit of a drawdown in the markets, an extended drawdown possibly through the early portions of, September as well with that infamous seasonality. You can see here that the end of the month of August sometimes is quite good, but then early September you could drop off. If it leads into a bit more than that, who's in control here of the larger term timeframes? It is, of course, the bulls. You have huge support down here, which is why I do believe that any extended dips on some of our favorite names could definitely be for buying. And I bring you guys a lot of those names on a regular basis in terms of every single week, almost every single video. I'm always there with a couple swing trade ideas for you guys, and I will be doing that as well in the event that we do consolidate. But now it's just a period whereby we can ride some of our longer dated longs. Some of the leap call contracts are good. Some of the short-term directional plays, you got to be a bit careful in terms of where you're buying them. You don't want to FOMO chase the tops. But for a long-term portfolio, it's very simple, guys. Very simple, right? You just have to DCA into the markets with 10 to 15% of your paychecks. Your future self will thank you. Don't think so much about timing the market. Don't think so much of it's time to sell everything, go 30, 40, 50% in cash. No, just do a natural DCA process. If you're going to be in the markets for the next 10, 15, 20 years, whatever you do right now is, whether you buy some here, whether you buy some here, whether you buy some there, or just wait for everything, it's not going to have such a meaningful impact for your portfolios on a long duration time horizon if you're using the DCA method. Moving on to XLF financials right now, really good performance by XLF, guys. Beautiful daily uptrend. And you got the pop and break above into a new all-time high. The weekly is also looking quite good. We were commenting on this, how they backtested this area beautifully in, the late stages of the month of July into early August. Previous resistance, current support for the markets. The bulls used it a couple times and now looking for that expansion curve, looking very strong there. Even on the monthly, looking very good for the breakout. Take a look at some of these banks, guys. Look at Bank of America. Breaking out monthly and weekly time frame. They consolidated for a little bit. Beautiful breakout there on Bank of America. Wells Fargo trying its best, didn't hold up the level as best as Bank of America, as good as Bank of America did, but still quite strong. On the monthly time frames, you are also looking for a bit of monthly expansion. JP Morgan looking like it wants to go for it, right? Consolidation. The bulls didn't really give back much. Consolidation, and now looking for the possible breakout, looking very good. Financials should be doing good in the event that we do get those rate cuts. Look on the weekly, guys. It's a bull flag, right? Looking for possible expansion, looking very good there. And even some of the names that have to catch up a little bit, like Visa, right? Look at MasterCard. MasterCard is already close to its all-time highs. Visa was lagging, which is why I was telling everybody down here, Visa was a phenomenal play. It's still a great play if you're looking to add this one to a long-term portfolio, in my humble opinion. Moving on to XLV Healthcare. Healthcare up 0.62% today, recovering a little bit of yesterday's losses. But what are the bulls trying to do? You have a very nice daily downtrend into massive engulfing move, looking for a new higher low and looking for the second leg higher, looking very good. Although on the weekly, it is a little bit confusing, right? It's a little bit bumpy right here. The process that the bulls are trying to do is very clear in my mind. You're going for the breakout retest, whether that's on the daily, on the weekly timeframes as well. What you're looking for here is the longer term timeframes to finally curl out of this monthly bottom and start pushing a little bit. The next target for healthcare is 145 up to about 148. This infamous little resistance zone that stopped us out a few times before. If we look at the 50 EMA, has it been a good time to buy healthcare? When it comes down into the 50-month EMA, well, 1, 2, 3, 4 times in the last 15 years would say that yes, indeed. So still a very nice accumulation trade. I do not really think that you're late, in my humble opinion. Moving on to semiconductors right now. Semiconductors, well, this chart is going to change a lot by tomorrow afternoon. That is definitely for sure. Keep an eye on the line in the sand, 281. Crack that to the downside. Sadly, it's a new daily downtrend, and you're just going to go into a bit more weekly consolidation. We have somewhat equal lows down here at about 280. Pay attention to those. If you crack those, you're coming into these guys right there. And that might just be synonymous with a little bit of monthly consolidation. The SOXX, right, is also another one to keep an eye on. Line in the sand level is 237.85. Pay special attention to that one. If you come back down, this is a gorgeous area, guys. An absolutely stunning area to be building some swing trade longs, in my humble opinion, whether you use the SOXX, whether you use the SOXL. SOXL, that level down there would be like 23, 22, 21, in my humble opinion. You'd be really back testing the midpoint of this support level right there. Could be a very interesting play if NVIDIA shows some weakness and the market pulls back. Just look for your favorite names, whether that's TSM, ASML, Micron, AMD, NVIDIA itself, or Broadcom. Just pay attention to these pullbacks. Those will be extended pullbacks on the higher time frames and could just be one of the last opportunities for us to build some positions here before we embark on a next leg higher, which in my opinion is probably going to be that Q4 period, which the market is known for being quite bullish at that seasonal time. Moving on to the Russell right now. The Russell holding up well. Got to give it to him. 0.83% to the upside, erasing yesterday's weakness. And we know they captured a big level recently. 232 down to about 225. Captured a very beautiful level. The highs of 2021, resistance, and it was resistance for a while back here in July. We've now smashed it. They're looking for a bit of a back test and possibly the run. This one could be looking good, guys, but it's a thematic play for the next year and a half, 2 years type of thing. The Russell has not done anything in the past, 4 years? Sure, it's come down. It popped up back in November, got all the way back with tariffs, but largely the Russell has been underperforming the other benchmarks. It has not done much of anything. So if the question is, are we late? Well, I'm just going to ask you, what is your time frame? Maybe you're late in terms of weekly call options, but you're definitely probably not late if your thesis is the expansion of the growth segment of the market, small caps, into possible rate cuts, which is the one thing that the Russell loves the most. If we take a look at the VIX right here, the VIX is not doing anything at all right now at a very low read of 14.62. The only catalyst that will bring this one higher is if NVIDIA brings down the entire market, if GDP is lower than expected, and if inflation is also lower than, or rather higher than expected too. So pay attention to this VIX. For now though, guys, as I always say, right, when the VIX pops up higher, great opportunity to be selling options with some good distance. It means the market's going to be red. So a great opportunity to buy. When the VIX is high, it's time to buy. And when we're down here, well, maybe it's not the best time to be loading up everything at all-time highs. You want to be looking for plays that have been left behind with low volatility and maybe throw some year-long call options at those. In terms of yields, still no action on yields here. I don't know why I cover this one every day. I've been very clear, guys. We're not going to get any action. The 10-year yield has to break 4.2 for you to really get a meaningful downtrend underway. The 20-year yield has to break below 4.7 for you to get a very meaningful weekly downtrend underway. And only when that happens will the bonds really start getting some lift, whether you take the, if you're taking the TLT trade or whether you're taking 7 to 10-year bonds, right? Those are going to need a little bit more patience for this trade. I do only think that might happen as we come closer to the rate cut, even though the market is pricing in a rate cut. The longer term yields will not move until it is actually official. So keep that in mind. Taking a look at gold right now, gold is not looking too bad. The bulls are trying to get something done, coming up into resistance right now, 34.20 down to about 33.71. This $50 pocket has been infamous for stopping out the market so many times, guys. Since the month of April, we have been doing absolutely nothing. So in the event that we break higher, there's two types of trades right here. The breakout retest trade, or if you wanted to possibly go for a swing trade short at the top end of this 34.11 with a stop loss, maybe above the highs right here, 34.50, and go for the flush, that thesis would be no, the market's not going to unravel. We're not going into a recession, and more money is going to rotate out of gold into equities a little bit more. You got to trade it with a tight stop loss though, because the bulls are still in control. It is still somewhat of a very nice tightening up of a range right here. This, in other words, is a bull flag. So the bias still is long. So be careful with any shorts. If you might have them towards the top, you do want to definitely keep a stop loss on those. And we can jump into crypto a little bit here. So Bitcoin up 1.37 on the day. They did push lower though, all the way down to about 108.5. So coming into some of our previous highs right here from the month of May, we will see if they dive a little bit deeper over the next few days and come into this, 107 to 101 pocket. Sure, we are clipping in to some of the highs. That's very normal. But if you do come down here, I think it's a great buying opportunity. I mean, it already is a decent buying opportunity to accumulate some longs. I'm not talking about some longs that could be rewarded possibly instantly, but some longs that could be rewarded on the longer term timeframes if we're looking for a monthly higher low for possible further trend continuation into 2026. It's not a bad area to be playing something like that. We know we have a weekly downtrend right now, so we're just into a bit of monthly consolidation. Bitcoin does this all the time. Tremendous rallies, consolidate to the 12 EMA. Tremendous rally, consolidate to the 12 EMA on the monthly. Tremendous rally. If we consolidate a little bit, I'll be buying the heck out of this lower 100 zone. So I'm building further Bitcoin positions just slowly. DCAing, I'm using MSTR. You guys can use whatever you want. You can use BITX if you want a little bit of leverage there. You can even use the ETF, specifically IBIT, or you can also do what I have been doing, not only accumulating shares, but also possibly selling some put options down here. If you get assigned, perfect, you're getting it exactly into the target. If you don't get assigned, perfect. You're just going to get to collect some juicy premium, which can be used to offset the cost of some of the shares that you're buying. Keep that in mind. Ethereum with a very nice day today, 4.66% to the upside. Now we know the bulls are trying to control this area right here, not trying to lose the daily uptrend. The price action is a little bit choppy. We'll see what happens. I think this one probably will move with the overall sentiment of the NVIDIA earnings, the GDP, the inflation metrics or whatnot. But we know on the weekly timeframes, we're still a little bit extended, right? So the bears have been trying to consolidate this, but the bulls are very strong right here, right? Beautiful weekly uptrend. We're trying to consolidate down to the 4,000 to 3,700 range. In my opinion, that's a stronger buy location. So if you're trying to use something like an ETHA or an ETHE to possibly sell some puts under the market, maybe get assigned some shares and looking to play the actual area of support, not a bad idea in my opinion. If you're just looking to play an Ethereum long because you have a thesis that it can go to $6,000, $7,000, $8,000, $10,000 over the next few years, then the logical thing to do, guys, is going to be DCAing into all of these dips, provided that you're a little bit late to this entire trade, right? We were talking about Ethereum so many times. back here. We were talking about the crack and the pullback right there. Now, I'm not going to lie, you're a little bit late to this trade, right? There is still possibly some meat on the bone for this trade, but probably not as fast acceleration as we saw since the month of April. So please keep that in mind. That's everything for your overall market rundown. Hopefully you guys enjoyed that. Now, let's dive into some big tech names. So moving into Apple. Apple up almost 1% today. Not that bad at all, guys. Apple is still probably one of my favorite big tech catch-up trades. If you take a look at the year-to-date performance, Apple is still down 8.43%. There's a few of my favorite big tech catch-up trades. It's Apple, Amazon, and Google. We know that all of this year, it's been the Microsoft show, the PLTR show, NVIDIA, Broadcom, Meta, Netflix performing really well. But we have Apple, Amazon, and Google kind of trailing a little bit behind. That is why I like Apple, not only for that reason, but also because their fundamentals are finally starting to improve. We got a very nice quarterly revenue print here last earnings, 10% year over year. That's the best quarter they had since December 2021. And we know we are looking forward to a brand new iPhone 17, which could really jolt some sales for the company, as their iPhone sales have been a bit lackluster. The 14, 15, 16, it's just not giving Apple the refresh cycle that they anticipated, but possibly this one will. In terms of your short-term price action, it's looking pretty healthy. Just keep in mind the line in the sand level is last Thursday, right? If you unwind this level, daily downtrend, but what the bulls are looking to go for here, they're looking to capitalize on leg number 2 with a very nice push into this infamous area of resistance. Big resistance here. It was support as well. And then the bottom end of this whole zone acted as resistance. Now that we've claimed a good portion of it, the bulls are looking to set up for a bit of a bull flag here on the weekly and looking for that expansion trade. Looking pretty good for Apple. I'm still a big fan of playing Apple to the upside. You guys know me. I'm in it with leap call options. It's not a bad proposition right now, as I do still think there's a lot left on this trade, provided that you're in this trade for the next 3, 6, 9, 12 months type of thing. Then it definitely makes sense. So the bulls are looking to convert into daily uptrend follow through. And on the weekly, we're looking for the same thing, right? This is a very healthy weekly pullback looking for a higher low. In other words, you could consider this a bull flag using all of this support that we've casually broken through right here as a nice fallback area in the event that Apple pulls back after NVIDIA earnings, or for whatever which reason. You guys will find me selling some short puts down here below 220 around the weekly EMAs. On to AMD right now. AMD up 2%, reversing a lot of yesterday's weakness. This one is going to move a lot with NVIDIA earnings, of course. The bulls aren't looking too bad. They're trying their best to defend this area, 170 to about 157. It was a daily uptrend. We've now lost that uptrend. The bulls are going to try to put in a bounce and try to get it back. If you get some nice lift after NVIDIA earnings, the resistance range is 186 to 178. One of the clearer timeframes, though, in my opinion, is the weekly. Look at this gorgeous weekly uptrend. All we're doing now is a bit of weekly consolidation. The 12 EMA on the weekly has caught up to the price, looking not too bad. In the event that we falter after NVIDIA earnings and start cracking below, I will be selling some put options down here around 150. Anything under 150, I'd be a big participant of selling some puts, looking for a monthly higher low for further trend continuation. AMD earnings were very good, in my humble opinion, and there's a lot left. There's a lot of juice left in the tank, in my opinion. Around 170, the trade is still fairly priced, in my humble opinion. And you guys know the drill. Fundamentals of AMD, guys, are going to be wildly improving over the next few years. If you look at EPS, they will be more than doubling their EPS by 2027. And in terms of revenue, they will also be almost doubling the revenue from this year in relation to 2028. So looking very good, this one. My price target for 2027-ish is about $300+. Moving on to Amazon right now. Amazon still just kind of doing a whole lot of nothing, right? 0.34% to the upside. The bulls are playing some really good defense, guys. Just pay special attention to 220, right? Daily uptrend. The bulls are trying to save this, trying to protect the support range right here, 227 down to 220. So keep an eye on that, right? They never lost the weekly uptrend. It is still looking pretty good for Amazon right now. They're just trying to set up a little bit of a weekly bull flag as well, right? Tightening up the range right here, above support, above the EMAs. Not looking too bad for some possible expansion for Amazon. We know that Amazon has been a bit lagging behind the market this year, only up 4% year to date, but their fundamentals are doing very, very well. All lines of business moving forward, fantastic net margins, fantastic advertising and cloud computing growth, AWS as well, very strong. And they also beat and raised the Q3 guidance. Don't forget about that. So Amazon, still one of my favorite candidates for some leaps. but also one of my favorite candidates for adding shares to a long-term portfolio. Very strong company, and the price is also not so bad fundamentally wise. You're looking at a 1.74 forward peg and just around a 35 forward price to earnings, which is not too bad. Obviously, it's not as cheap as down there, but we can't really expect those prices unless the markets really fall off a cliff. Moving on to Google right now, Google down about 0.58%. Not the worst day for Google, but there might be some apprehension this week because possibly this week or next week, the judge is going to come out from the Department of Justice with their ruling. Are they going to break up the company? What will they possibly have Google do in terms of recourse around the search monopoly? So keep that in mind, right? The line in the sand is still 197.45. Any move lower looking for a higher low for possible further trend continuation. Now we are slightly above this area, right? I mean, we're above it. We made our way above it, but we never closed a weekly candle above it. So pay attention to that. 208 down to 202. In the event that the judge comes out this week and kind of erodes our price action right here, you're probably coming right back down here, 195 to 190, which is where you will see me pile into a bit more swing trades for Google. I'm not going to put on any more longs until I get that DOJ ruling. I have my longs. You might remember I bought some leap calls down here. I bought a ton of shares down there as well. Now I'm good. If we get a pullback though, could be a nice area. So keep that in mind. Google's valuation, even up here around the 207 mark, which is 10% higher than when we did it. It's a low 20s multiple, forward price to earnings, and a very cheap peg as well, probably around 1.5 right now if I had to guess, just basing off the 207 price. On to Meta right now. Meta not with the worst day in the world, but still, the bulls are trying to get a daily uptrend back. We know they had it here after earnings. It was a nice push. They lost it by flushing these lows. Now we have to get it back. The line in the sand is set at last Wednesday and Thursday lows. In the event that you crack that, daily downtrend simply continues at this point, and you might just go for the earnings gap fill. It wouldn't be too awkward. We got a lot of support down there on the higher time frames, talking about like the weeklies. 707 down to 680 is going to be that really large area. If we do pull back a bit more, you will see me buy some more Meta shares for the long-term portfolio. As of right now, I have a small swing trade on Meta right now with the stop below here and a take profit all the way up there in the event that the bulls are able to actually get this done and reverse and just go for the weekly uptrend continuation trade. The valuation of Meta up here at about 760 is not the worst. It's still under a 30 forward price to earnings. It's an okay free cash flow yield, an okay price to sales metric as well. The PEG is slightly high, but it's a very profitable company, and they will be doing really well over the next few years, in my opinion. Moving on to Microsoft right now. Microsoft down 0.44%. The slide on Microsoft continues at this point. Now, this was a clear loss of the 12 EMA. First time in the last 3-4 months. Loss of the uptrend, also the first time. So now you got to wait until the bulls show you where the bottom is. We're currently trending around the 50-day moving average. That's fine, but there's no support right here. I mean, you can make an argument that there's a tiny little level here around 500, but zoom out to the weekly time frames and you'll see, guys, like there's no support here whatsoever, right? It has just been a categorical move to the upside, very clinical, right? A lot of algo buying probably. Definitely the support level. If you say there's a support level down here, I mean, this is a support level you pull down into it. This is a big support level. Here, there's not much of anything. So sadly, you'll have to wait for the bulls to show you where the actual bottom is. And the only way that they can do that is by setting an engulfing move and getting us the daily uptrend back. When they get the daily uptrend back, you can officially say, all right, that's the lows of weekly consolidation, and we might just be going for another leg of weekly price action higher, as the bulls never lost the weekly uptrend. This is just very healthy consolidation. No swing trades on Microsoft from me until the bulls get the daily uptrend back. And also, I'm not really adding any more shares. The valuation is kind of top end of the range for Microsoft. I added all the shares that I wanted to with you guys on the channel all throughout last year, and I'm just kind of riding the bag that we accumulated. Moving on to Netflix right now. Netflix up about 0.66%. The bulls doing a good job of protecting this support, 1210 down to about 1185. Not too bad at all, right? They're trying their best to keep this daily uptrend going and keep the possibility of a new weekly uptrend alive as well. Netflix was in this same scenario as Microsoft is in right now. And I was telling you guys, there isn't much support here at all. So you got to wait until the bulls show you where the bottom is. They have since done that, and they're now accumulating again. If I had to take a Netflix swing trade long, very simply, stop would go below the support range, and you would be targeting at that point weekly expansion towards the highs. A pretty good risk to reward, in my humble opinion. So that is a swing trade opportunity on Netflix. In terms of adding any long-term shares, it just depends on your time horizon, right? Because they are trading at a rich valuation in terms of forward multiples for next year. But by 2030, we know management guidance is about for $1 trillion in market cap. I think they can do it. That will be roughly a 2x from here over the next 5 years. So obviously the risk to reward is not as attractive as like a small cap growth name, but Netflix, very solid company, very dominant company as well, and improving margins every single quarter. On to NVIDIA. So NVIDIA is going to have a huge expected move tomorrow. 5.53% is what Wall Street is anticipating for the style of move that they can do. If you have a look at some of the NVIDIA numbers, right? So overall revenue is supposed to be 46 billion. That would be a 53% increase from a year ago. Data center revenue should be up 57% year over year. And they'll be making a lot more in terms of guidance at 53.4 billion in terms of revenue. Very strong. A lot of emphasis will be on the margins. I don't think margins are going to be a problem with NVIDIA just yet. They have a lot of pricing power, although AMD's MI350X is putting some pressure on that market. NVIDIA sells its Blackwells for about $35,000. AMD sells its competing product for about $25,000. So we will see eventually if NVIDIA runs out of pricing power, but that day probably will not be tomorrow. Now, in the event that we make a 6% move to the upside, you guys know exactly where we're going. We're going all the way possibly up to $200, right? 6% would put you at the 190s, maybe all the way up to 900 or 200, excuse me, if it's really good. And 6% to the downside, you'll be challenging the line in the sand. The daily lows right here of last Wednesday, right? We know that we lost a bit of momentum right there. If you flush, you're going for the weekly consolidation leg, which would not be too awkward. And you would also at the same time probably be going for a bit of monthly consolidation. The monthly candle in August at that point would kind of be red coming into the end of the month. And then maybe early September, it drops you a little bit more. The area that I'd be shopping for in the event that we come down, of course, is selling some put options down here, 155 or below into very solid support. However, if we wanted to play this one for earnings tomorrow, if you guys want to go for the upside play, or maybe just sell some options under, I have two ideas for you. These are just ideas. It's not financial advice. But if I was looking to play NVIDIA, I'd maybe go with the NVDL 2x leverage product. So keeping in mind, when I play earnings, selling puts under the market, I want to be 2 times the expected move. So that would be 11 to 12% on NVIDIA to the downside. 11 to 12% would literally be very close to the support range. About 156, right? NVDL is 2 times leverage. So you know that it's going to be 2 times the expected move. So 4 times NVIDIA's expected move, aka 25-26% lower. That's the support range for NVDL, and you don't have to commit too much capital. It's a bit cheaper than NVIDIA to do it, but if I need to play, right, 24, 25, 26% lower, I have to be mid-60s. How much are we making for a mid-60s short put by the end of the week? Well, I'm glad you asked. We'll go down on the options chain here and check. You'd be making roughly about 0.5%, right? 68 down to about 65. Not terrible in terms of premium, and you would be able to pick up some leveraged shares of NVIDIA, maybe where you actually want them. In the event that NVIDIA comes down that much, you'd be collecting those 2 times leverage shares in the location that I would not mind buying them as well, down here in like the 150 range of NVIDIA itself. That is opportunity number one. In the event that you wanted to play it to the upside, well, we got to play it small because earnings are always a casino, right? So you want to keep your bets very small. We're not going to buy weekly call options, at the money call options, and pay super expensive for them. I mean, look at these weekly call options, guys, right? For NVIDIA. What are we doing here? We're going to buy August 29th calls at $180 for $700 a pop? Probably not, right? There's a bit of an expensive trade. It can work, but the volatility is working against you. If NVIDIA just doesn't move either up or down and just ends flat, you're going to lose all your money. So the way that I would play this, if I had to build a long position, is I would go out to November and I would play this with a very casual call debit spread. Here you can see I'm going to price out some call debit spreads for you guys. I'd be looking for maybe the 190 versus the 195. These would have a total cost to you of about $1.90, right? So under $2, $200 essentially per contract. The reward potential, if NVIDIA does move higher into that area by November, is going to be about $400 or $500. So your total P&L, right, the maximum amount of profit that this spread can make is $5. You're paying $2, right? So your risk is $200. Your maximum upside is $300. The difference between 5 and 2, of course, right? So not bad. It's a favorable risk to reward profile. And if something happens with NVIDIA in the short term, at least you have almost 3 months for them to recover and be able to make that push higher. But you can keep the trade small. Obviously, this is just for one contract. Depending on the size of your account, you may want to scale this one up, but just don't risk too much on earnings plays, all things considered, okay? That's how I would be playing NVIDIA myself. I don't usually give earnings trades, but I know some of you guys maybe want to play. I'm just here to say that there's a safe way to play NVIDIA earnings that does not entail buying weekly call options and full sending the YOLO, right? So that's it for NVIDIA. Let's move on to Tesla next. Tesla up 1.46%. The bulls are looking like they want to go for it. We had kind of planned this trade out since Friday, essentially saying that I would not be surprised because of rate cuts that Tesla might be able to catch some bids. Very nice follow through for the bulls. They're looking to crack through this resistance area of around 360, looking quite good. You know, we had that tightening range right here. The bulls broke out of it. You got the weekly uptrend going in your favor as well. They almost perfectly back tested down here, this bottom of the trend line right there, and also your EMAs. Now they're looking like they're going for it. Could be a nice little position for some expansion. If you want to play it, you would play it small because you're a bit late. I mean, I know not all of you guys maybe watched the video on Friday, but I was saying on Friday, not a bad bet for some Tesla longs, looking quite good. And it is getting some nice follow through. If you crack through this area, you're going straight to 380 to 400. And maybe then they offer you a bit of the breakout retest trade. It would be a very nice breakout retest trade for some further longs in the event that you think that you're too late and you don't want to buy into this resistance area in the event that you get rejected. Moving on to Palantir right now. Palantir up 2.35%, showing a little bit of a sign of life right here. Backtesting kind of the 50-day EMA. They haven't lost this one much since the month of April at all, and looking very good, right? You got the low, you got the high, you got the higher low, and maybe looking to make the higher high. That would be a recapture of your daily uptrend and would put an end to this short-term weekly consolidation, which also came in to the 12 weekly EMA, an area that Palantir has often backtested in recent history, of course. That being said, it doesn't look too bad. There is a bit of a swing trade long right here. If you want to keep a tight stop, it would be below the low of yesterday. A bit of a wider stop, right? Both would be going for expansions back to the all-time highs. Tight stop would be below 149 for some possible expansion, and a wider stop if you're saying that this is the new daily uptrend and that is the end of weekly consolidation, you would put your stop below the end of the weekly consolidation and just go for that risk appetite to the upside, right? Both trades are fairly decent risk to reward profiles. Even if you use the weekly higher lows right there, it's not bad, right? It's about a 1.4 to 1, not the best, right? If you keep a tighter stop below the lows of yesterday, then obviously the risk reward profile gets a bit better. Then you're looking at something like a 2 to 1 type of trade, but not looking too bad for the re-expansion of Palantir. But once again, this one can move in a very volatile way and probably will be impacted by the sentiment from NVIDIA earnings to the upside or to the downside, of course. Moving on to SOFI. SOFI down about 2.03%. Not a bad day for SOFI. I mean, they pushed a little bit higher, brand new 52-week high, and now just looking for a bit of consolidation. But I like this pattern a lot here, guys. Nice engulfing move by the bulls right now. We know they kind of lost the trend a little bit here. Nice engulfing move. Now, what are we looking for? The good old breakout retest. There is a swing trade opportunity for some longs. For the reload down here, talking about 24.2, down about 22.4. If we want to sell some puts down there, not a bad opportunity, but also the next area to reload some possible swing trade longs, because if you pull into there, pull into the 24-23 region, very easy. We could set a stop loss below this guy right there, pull back nicely, and then you're targeting psychological expansion going all the way to about $30. It would be a very nice breakout retest trade with some very nice follow-through continuation. Sure, we are a little bit overbought on the weekly. That would be corrected in the event that we pull back a little bit. I'm a big fan though, and I have started, I'll be honest with you, I started at the end of the day today, selling some put options into this location for a few shares that we might want to carry a little bit for the wheel strategy in around the $25, $26 range. SOFI's valuation is not the worst. I mean, let me just redo it for you guys right now because now we're too far off, right? But let's say they pull back to 25. We did the price to sales yesterday. It was a 9. Pull back to 25 real quick in terms of price to earnings, in terms of the PEG. Let me just do it for you with the calculator real quick. So 25 by 0.31, you're looking at a 80.6. I know, seems high, but don't forget they're growing EPS by 50% per year, which is ridiculous. That gives you a 1.6 PEG. So it's still not even that bad, right? The valuation at 25, it does lead to some possible more upside scenarios. And for long-term shareholders, this one is still a bit of a nibble and a bit of a hold in my humble opinion, as I would not be surprised if SOFI makes its way up to 40, 45 billion throughout 2026, right? Maybe not immediately, but for now, you just kind of want to play these swing patterns as long as the bulls are in control. On to Uber right now. So Uber up about 1.44%. Uber's looking pretty good, man. It's been very choppy though. Very, very, very choppy price action recently. But if you look on the weekly time frame, the price action is a lot more clear, right? Beautiful weekly uptrend right now, going for the push possibly into the $100 psychological level. No swing trades for me on Uber, but if you give me another back test, let's say, down into here, you might find me selling some put options under the $90 level. And also, if you pull back into there, it might be a decent location for some swing trade longs as well. We were kind of commenting on this, on Friday's video and Mondays as well. If you get a bit of a back test here into support, you can set a stop loss below the support range and then just go for psychological expansion to 100, right? So if you can get maybe some buys in like low 90s, you keep a tight stop loss around 89, then you pretty much go for the $100 expansion, just banking on the fact that the bulls have not really lost this weekly uptrend over the course of the better part of the last 3-4 months. Wouldn't look too bad in my opinion. And now lastly, TSM and also Uber, sorry about that. Uber, not that bad in terms of forward valuation, right? At $89, where it could come back into perhaps. You're looking at a forward price earnings of 30, a peg of 1.17, a very, very decent free cash flow yield as well. So I already have all the Uber shares that I want. We accumulated all of them last year into the early portions of this year, and now I'm kind of just riding. But if you're a new possible Uber shareholder that wants to start a position, the valuation is not terrible in my humble opinion. And now lastly, TSM. TSM is going to move a lot with NVIDIA earnings tomorrow. Look at the bulls. They've done a really good job here. Daily downtrend. Now we have a very nice retracement. The retracement size right now on the fibs is probably over a 78%. As a matter of fact, it is exactly a 78% retracement, looking very solid right there. So in the event that you come back looking for a higher low for further trend continuation, the bulls have a lot of space to work with at the same time, right? We know it's been very choppy on TSM. The weekly time frame provides a bit more clarity. This is just kind of like a bull flag right there. We know that the leg of expansion was very nice. It's a weekly uptrend looking very solid. And now they're just trying to set some weekly higher lows right here. They tagged the weekly 12 EMA, bit of a cool down period for TSM. It ran really hot. It's been consolidating for a better part of the last 4 or 5 weeks. I constantly say that this one is one of my favorite semiconductor companies. For the valuation alone, around 230, it is still very cheap on a forward basis, whether you measure with the PEG, the PE ratio, the free cash flow yield is not that bad. They have tremendous net margins. The CEO has said for the past 2 quarters that they just cannot keep up with the demand all the way through 2026. So I would not be surprised if at the end of this weekly consolidation, you are met possibly with another monthly leg higher. As a result, I'm still buying TSM shares for the long term. And if you pull back after NVIDIA earnings, I will be a big fan of playing the wheel strategy, 220 down to roughly 210, that little pocket into our final resting place here, which could just be a very healthy monthly higher low in the event that, the end of August and early September is not that great for the markets. I just want you guys to know that I will be a firm dip buyer of TSM throughout its various stages of decline in the event that we get it. If not, I've just been still buying, DCAing with my long-term portfolio at these high prices, and eventually we probably will get a very nice breakout. That is everything that I had for you guys today in today's video, keeping it a bit shorter today, of course. Hopefully you guys enjoyed. If you did, consider dropping a like. I would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these every Monday to Friday after the close. And last but not least, if you have any questions, I'm always there to answer in the best of my abilities, your questions in the comment section. So feel free, leave a comment, anything you want, question on stocks, options, long-term portfolios, general market sentiment, anything you guys want. You guys know that I'm always there to answer your comments as soon as possible. And if you guys wanted to join a community of traders and investors such as yourself, where over 200 other people are in there every single day trying to do their best in the markets, and where I also trade live, the link to our community is down below in the video description. In there, you get a few different things. You get access to all of my trades in real time, whether those are the wheel trades, whether they are the different various directional trades like call debit spreads, leap call options, swing trades with shares, long-term portfolio additions as well to my portfolios. You get access to all of those things. The green, here's just some of the weekly trade recaps. All the green check marks are little wins. The red little circles are little losses. Here are all of our trades over the course of the past, I don't know, 2, 3, 4 months type of thing. So you get access to all those trades in real time. You also get access to our private morning live streams, Monday to Friday, where I trade the markets live in the morning and then take all your questions on your stocks, your options, your long-term portfolios. If you can't be there, they're always recorded afterwards. You also get access to our private video section, educational section, where I'll go over technical analysis, fundamental analysis, different options trading strategies that I don't show so much on YouTube as well, how to grow small, medium, large portfolios, which portion of those portfolios should be allocated in which strategies to give you guys the best risk to reward factors as well. So many various fundamental, or rather educational videos in that section. Our members always find tremendous value in those. You can also ask me all your questions throughout our chat rooms all throughout the day, and I'm always there to help you guys out with whatever you may be wondering about in the markets. And last but not least, you get access to all of my watch lists and all of my charts, just an added bonus for our members in the event that you want to just copy my support resistance levels as I draw them as the markets move further, and in the event you wanted to copy my earnings presentations, essentially on over 200, 300 possible different stocks where I do the fundamental valuations on the chart. You guys just get access to all those as a extra bonus. If any of that interests you, as I said, the link is down below in the video description. Hopefully I get to see you in there soon, and if not, I'll just see you right back here on the channel. Take care, see you guys tomorrow. Have a very good day tomorrow. Looking forward to NVIDIA earnings. Should be fun. And I'll be recapping everything for you tomorrow, of course, after the close. Take care and peace.